Here's a summary of the Goldman Sachs Group, Incorporated's Q3 2025 earnings call transcript, designed for reading aloud. Good morning, everyone. Today, we'll recap the strong third quarter 2025 performance for the Goldman Sachs Group, Incorporated, highlighting key financial metrics, management's outlook, and strategic initiatives. Financial performance highlights. Goldman Sachs delivered robust results in the third quarter of fiscal year 2025, achieving net revenues of $15.2 billion. The firm reported earnings per share of $12.25, with a return on equity (ROE) of 14.2%. Year-to-date, the firm's ROE stands at an impressive 14.6%, with a return on tangible common equity (ROTE) of 15.6%. Key business segment performance. Global Banking and Markets generated $10.1 billion in revenue, with a year-to-date ROE of 17%. Advisory revenues were particularly strong, reaching $1.4 billion, a 60% increase year-over-year, driven by a surge in transaction completions. Goldman Sachs continues to lead globally in M&A advisory. Equity underwriting revenues of $465 million rose 21% year-over-year, benefiting from increased IPO activity, including prominent listings. Debt underwriting revenues saw a 30% increase to $788 million, fueled by higher leveraged finance activity. The firm's investment banking backlog is at a three-year high. FICC net revenues reached $3.5 billion, up 17% year-over-year. This was driven by improved performance in rates, mortgages, and commodities, with financing revenues contributing $1 billion, primarily from mortgages and structured lending. Equities net revenues totaled $3.7 billion. While equities intermediation saw a slight decline, record equities financing revenues of $1.7 billion were a significant contributor, up 33% year-over-year. Overall financing revenues in FICC and equities combined rose 23% to $2.8 billion, now comprising nearly 40% of FICC and equities revenues. Asset and Wealth Management, AWM, generated $4.4 billion in revenues. Management and other fees reached a record $2.9 billion, up 12% year-over-year, driven by higher assets under supervision. Private banking and lending revenues were $1.1 billion, with year-to-date revenues up in the high single digits, primarily due to increased net interest income from ultra-high-net-worth clients. Total revenues across management and other fees, and private banking and lending hit a record $4 billion for the quarter. The firm anticipates high single-digit annual growth in this segment over the medium term. AWM achieved a 23% pre-tax margin and a 10.5% ROE year-to-date. Assets under supervision reached a record $3.5 trillion, marking the 31st consecutive quarter of long-term, fee-based net inflows. Alternatives assets under supervision totaled $374 billion, generating $597 million in fees. A record $33 billion in gross third-party alternatives fundraising occurred in the quarter, bringing the year-to-date total to $70 billion, significantly exceeding prior expectations. Management's forecasts and future outlook. Investment banking. Management expressed optimism regarding the investment banking outlook, noting strong tailwinds. Sponsor activity is up 40% year-over-year, and with significant dry powder and expected rate cuts, the environment remains constructive for corporates. CEOs are shifting focus to long-term strategic decisions. The M&A backlog is at its highest level in 3 years, with expectations for a strong M&A environment through the end of the year and into 2026. Asset and Wealth Management. The firm expects continued high single-digit annual growth over the medium term and is confident in uplifting returns in AWM over the next couple of years. Operational efficiency and AI. The launch of One Goldman Sachs 3.0 is a new, more centralized operating model propelled by AI aimed at driving efficiencies, creating capacity for future growth, and improving client experience, profitability, productivity, and employee experience. This multi-year effort will be informed by AI-driven process reengineering in areas like sales enablement, client onboarding, lending, and regulatory reporting. Updates on this initiative will be provided in January. Significant risk factors. While management expressed confidence, they also highlighted the importance of disciplined risk management, especially during periods of investor exuberance and market cycles. Specific attention was given to dynamic risk management of credit exposures using tools like synthetic risk transfer, SRT, as prudent hygiene, not due to warning signs. The firm also continues to emphasize its rigorous underwriting standards and diversified lending portfolio in the context of private credit. Key management statements. David Solomon, Chairman and Chief Executive Officer. We delivered very strong results in the third quarter and generated net revenues of $15.2 billion, earnings per share of $12.25, an ROE of 14.2%. On investment banking, we've seen increased momentum in our number one M&A franchise. We hit the milestone of advising on over $1 trillion in announced M&A volumes for 2025 year-to-date. He also emphasized the multiplier effect of advisory relationships across the firm. On AWM growth, we are relentlessly driving forward our growth strategy. As we continue to grow our advisor footprint and expand our suite of client offerings, it is clear that we've been making very strong progress in enhancing our business mix by growing our more durable revenues at AWM. On One Goldman Sachs 3.0. Earlier this morning we announced to our people the launch of One Goldman Sachs 3.0 propelled by AI. This is a new, more centralized operating model that we expect to drive efficiencies and create capacity for future growth. He stressed this is an opportunity to use technology to automate, drive scale, and create capacity for further investment in business growth, not a response to revenue issues. On the regulatory environment, I do think this improves our competitive position relative to others that are outside of the regulatory landscape. Dennis Coleman, Chief Financial Officer. In the third quarter, we generated net revenues of $15.2 billion, earnings per share of $12.25, an ROE of 14.2%, and an ROA of 15.2%. On FICC and equities financing, total financing revenues of $2.8 billion rose 23% versus the prior year, as we continue to deploy resources to grow FICC financing and bolster our leading position in equities financing while maintaining a keen eye on risk management. These revenues comprise nearly 40% of overall FICC and equities revenues. On expenses, our year-to-date compensation ratio net of provisions is 32.5%. Quarterly non-compensation expenses of $4.8 billion rose 14% year-over-year, driven by higher transaction-based costs, as well as charitable giving and higher litigation expenses. On capital returns, in the quarter, we returned $3.3 billion to shareholders, including common stock dividends of $1.3 billion and common stock repurchases of $2 billion. Lowlights/areas for monitoring. While overall equity intermediation revenues declined slightly, this was attributed to strong prior year comparisons and a softer cash equity component. The derivatives and financing parts of the equities business showed strong performance. Incentive fees in AWM are tracking below the $1 billion annual target for this year, though significant unrealized incentive fees provide visibility for future recognition. In summary, Goldman Sachs demonstrated strong financial performance in Q3 2025, driven by robust activity in its core franchises, particularly investment banking and asset and wealth management. The firm is strategically investing in AI and operational efficiency through 1. Goldman Sachs 3.0 to drive future growth and enhance profitability. Management remains confident in the firm's market position and outlook, while prudently managing risks in an evolving economic and regulatory landscape.